With inflation soaring, prices going higher, and the slowdown in the future, how come we still see the markets going higher and higher? Stick around through the video and I'll get into the reasons I see why that's been going on. Good afternoon. My name is Adam Kahn, and I'm the Rational Investor. I hope you guys are all enjoying your day. Today is Monday. It's December 4th. Beautiful day, so I'm enjoying the nice weather out here in Vegas. Before I forget, do me a favor if you haven't already, hit that subscribe button, smash the like button, make some comments, let me know what you guys think about the economy and what's going on, where I'm wrong, what you think. I love the conversations. I love seeing the channel grow, and I really appreciate that. Also, when you do that, it helps YouTube's algorithm so other people can find the channel as well, which is really cool. If you're enjoying the content, it helps it get out there a bit, which is really my ultimate goal. I'm also going to put a couple links in the description on opening an account with SoFi. I opened an account with my son. If you fund the account and put $10 or more in there, they're going to give you a free $25, and they're going to give him a small gift as well. He's only 13 years old. I try to teach him about investing and saving for the future as well, and that helps kind of get him to listen a little bit, because I don't know, those of you who have kids know that your kids don't always pay attention to what you're talking about. And when that happens, well, he pays a little bit more attention because he sees some money and it's pretty cool. Anyway, I'm going to get into why I see the markets going higher right now, despite all the things that everybody's nervous about. We have high inflation, we have huge credit card debt, defaults are beginning to go up on real estate, as well as cars and things like that. There are a lot of things going on that are making people really nervous about what's going on in the economy. So, why are the markets going higher? Well, first and foremost, markets are forward looking. Like, they see the future more than they deal with today. And where we're going, if you go to the CME Fed Watch and you look at what the Fed's expected to do next year, they're pricing in almost 125 basis points of rate cuts. So that means lower mortgage rates. That means that the companies are able to borrow at a lower interest rate. And we haven't seen huge unemployment the way that people have expected. So the companies that are surviving now and doing just fine, they've lowered expectations. And on those lowered expectations, each time they have quarterly reports, a lot of them are beating those expectations. Now, let's talk about one of my things that I love the most, which is dividend stocks. Well, a lot of these dividend stocks, they've gotten beat up a bit, and they're paying 3, 4, 5, 6% dividend returns. If the Fed ends up cutting rates and you see lower returns on things like CDs and the high yield bank accounts, treasuries, and even the mortgages, not that people are investing in that the same way, what would you expect to happen to the dividend stocks? Take, for example, now you guys have to do your own research. This really is just an example. It's just one of the companies I like in some ways. But you guys have to make your own financial decisions and not listen to anybody on YouTube because we all have unique situations. So I'll pick Pfizer, which I'm picking on purpose, but it's paying a little over 5 or 5.5% dividend right now. Well, if the Fed ends up cutting rates next year and you see CDs and things like that start to drop to 4 or 3%, I think people might start looking to dividend stocks trying to get some return. Well, since I think these markets are forward looking, the stock's already going to have moved by the time that the CDs that people bought the last 6 months or last year start to roll over. When you were getting what people would call guaranteed 5% return by buying a 3 month, 6 month, 1 year, 3 year CD, as that money starts to roll out of those products and people now have that cash available that they invested in those things, my guess is if the CDs are now only paying 3% or 4%, people might start to try to look for other things that are paying a little bit better. And if the bank accounts are now reverting back to 2% or 1% where it was before, that's going to push the money back into the markets. The interesting thing is watching the housing market. I think right now is one of the best times to buy of any time. It's pretty cool because we've had a bit of a correction, but if the Fed ends up lowering rates, I think if you see the mortgages get into the mid to low sixes, the buyers are going to get much more comfortable of that being a fair rate for a mortgage. It popped up into the eights. They've gotten spooked out. I do think if we come down a little bit, people will get comfortable again. I just don't see the mass unemployment. Now, there's obviously the black swan events. We have wars going on in Ukraine as well as Israel. If that starts to expand and become bigger problems, of course, that can start impacting the economies. But at least for now, everything seems to be going along just fine despite all the gloom and doom and the fear out there. My God, Bitcoin breached 40,000 today and nobody or yesterday, and nobody's really talking about it much, which to me is what the great sign is. When nobody's paying attention and the markets continue to go up, that's what the value is. When everybody's paying attention and they're finally excited about it because they think the markets are going higher, that's probably when they've overstretched themselves. We still find ourselves in the timeline of disbelief. Nobody thinks it can go higher. Nobody thinks that the economy is doing well. Go on YouTube and see all the people talking about how terrible things are. That's kind of what I like to see because I think the reality is go out to dinner, go to places you normally go. I mean, here in Las Vegas, go down to the casinos. My God, my wife had to return something down at Caesars. They were mobbed. You could barely walk through. There were so many people down there. That to me is not the sign of a bad economy. And it sure isn't 2007 or 2008. Times now are different. I think the Fed did a really good job. I think they slowed things down. And as they slow, the data is going to start showing it. And next year's an election year. That's a lot of spending from both the Republicans and Democrats. That's going to push some advertising. And it's also going to push all sorts of things in terms of money going out into the economy. Generally, election years are not bad economic years. There's so much negativity going into next year. I feel like we're going to start out next year like we did this year, and I hope it continues for years to come. Um, just the way I feel about what I'm seeing. I know people are struggling. I know that they say that incomes haven't kept up with the inflation, but let's talk about that as well too. At COVID, incomes went up a ton in advance of the inflation. Then the inflation came around and incomes haven't kept up since. Remember when nobody was working and restaurants were paying whatever they could to get workers in, and all sorts of businesses would give huge raises? I have a friend who has a management company that they were paying like $9, $10 an hour that went up to almost $20 an hour in a really short time just because they couldn't find anybody. Then the inflation came around, and people are already making a higher wage, saying that my wages aren't keeping up with inflation. So I don't know that it's really accurate or if the wages went up prior to the inflation. I also feel like the inflation is slowing down and the data is behind. The gas prices have already come down. When I go to the grocery store, it is not the same as it was a year ago or so. They're doing many more sales, the Black Friday sales, the Best Buy stuff. And I know when I've talked about some of the stocks that I've been talking about, the retail sector is one I really like because I feel like the negativity around that section has been terrible and things probably aren't that bad when I go out, just like the casino, Walmart, Best Buy, Target. They're plenty busy, and I'm guessing they're doing a ton online as well. What I hope and what I think is you're going to see this go on for years, that we're going to have big drawdowns. Stocks and housing might have some pullbacks, but the overall trend is still higher. And until people get over optimistic, I think that just continues and continues. Anyway, one more reminder again, if you've made it this far, that's awesome. Thank you so much. But also don't forget to subscribe if you haven't already. Hit the like button. By all means, make some comments. I really like the banter back and forth. I enjoy the people who disagree. I got no issues with it. I just like to talk this stuff out and come up with ideas. Anyway, have a great day. Have a good week. I'm sure I'll talk to you tomorrow or the next day.